Jesse Livermore, known as one of the greatest traders of all time, built his fortune not on luck but on strict risk management. His trading philosophy wasn't about predicting markets, it was about protecting capital. In this detailed guide, you'll learn the exact mindset and rules that allowed Livermore to survive massive crashes and still come back stronger. We'll explore his golden principles: never risking too much, cutting losses fast, and knowing when to stay out of the market. You'll discover how these ideas still apply to modern trading and how to turn them into practical steps you can use today. October 1929, the world was booming. The stock market had become a gold rush. Everyone from bankers to taxi drivers was chasing the dream of overnight wealth. The ticker tape rattled nonstop, and greed was in the air. Then, in a single week, that dream collapsed into chaos. Billions of dollars evaporated, panic swept through Wall Street, and thousands of investors watched their life savings disappear. Yet, while the world plunged into financial despair, one man stood apart, calm, disciplined, unshaken. Jesse Livermore didn't just survive the crash, he profited from it, walking away with what would be more than $100 million today. How did he do it? Because while everyone else was chasing fortune, Livermore was protecting his capital. He understood something that most traders still ignore. Trading success isn't about prediction. It's about preservation. Livermore didn't see markets as a game of luck but as a battlefield. He treated every dollar as ammunition, to be used only when conditions were perfect. His mission wasn't to win every trade, it was to stay alive long enough for the right trade to appear. That single shift in mindset, from chasing profits to defending capital, is what separated him from the millions who lost everything. Most traders enter the market thinking about reward. How much can I make? Livermore asked a different question. How much can I lose and still play tomorrow? That mindset became his ultimate weapon. Because the truth is, in trading, survival is victory. You don't need to be right all the time, you just need to protect yourself when you're wrong. Livermore once said, "The big money is not in the buying or the selling, but in the waiting." But the ability to wait comes only when you've preserved enough capital to stay in the game. That's the essence of professional trading, the art of staying power. Trading success equals protection, not prediction. The markets are unpredictable by nature. No strategy, no indicator, no insider tip can guarantee direction. Even Livermore, with all his brilliance, couldn't consistently forecast the next move. What he could control, and what you can control, is your exposure. How much of your capital is at risk every time you click buy or sell? How much can you afford to lose without emotion taking over? That control is the foundation of risk management, and it's what allowed Livermore to rebuild, time after time, through booms and crashes alike. Most traders blow up not because they lack skill, but because they ignore defense. They treat trading like a prediction contest, not a business of probabilities. Livermore knew better. He believed markets will always fool the crowd, so the only thing a trader can truly master is himself. When others were desperate to act, he waited. When others feared missing out, he stood aside. Cash to him was not idle, it was a position. He once remarked that there are times when the wisest thing to do is nothing at all. And that philosophy alone made him millions. You see, risk management isn't about fear. It's about freedom. The freedom to stay objective, patient, and consistent, no matter what the market throws at you. That's what kept Livermore in the game when entire institutions collapsed. So if you're watching this video hoping to find the next hot strategy or magic signal, pause for a second. The truth is, there's no secret formula that can predict markets. The real edge lies in protection, in the boring, disciplined routines that keep you solvent when everyone else is bleeding. That's the difference between amateurs and professionals. The amateurs chase opportunity, the professionals manage risk. And Livermore was the ultimate professional. His rules were simple but absolute. Never risk more than a small fraction of your capital on any single trade, always cut losses quickly, never average down, and only trade when everything aligns. He followed these laws religiously because he knew that the market doesn't reward bravery, it rewards discipline. He journaled every trade, every mistake, every emotion. He studied himself as much as he studied price. And through that process he developed an unshakable mental framework built entirely on defense. In this series, we're going to break down those timeless principles one by one. You'll learn how to build your own risk management system modeled after Livermore's playbook. One that allows you to survive volatility, avoid emotional decisions, and trade with confidence. Whether you're in stocks, forex, or crypto, these rules apply because they're rooted in human behavior, not technology. By the end of this journey, you'll understand not just how Livermore traded, but why his mindset still defines every successful trader today. Because anyone can make money in a bull market, but only the disciplined survive the bear. Success isn't about making every trade a winner, it's about ensuring no single trade can destroy you. Jesse Livermore proved that greatness in trading comes not from forecasting the future, but from protecting your capital in the present. That's the real secret. The one lesson that outlives every crash, every strategy, every market cycle. Protect your capital, and your capital will protect your future. When people hear the name Jesse Livermore, they often think of the man who made and lost millions trading the markets, the legend who shorted Wall Street and walked away a millionaire while others went broke. But what most people don't realize is that behind every headline, every fortune, and every failure was one unshakable philosophy, a philosophy built on risk, preservation, and mental discipline. Livermore didn't just play the market, he understood its language. And its harshest lesson was simple: the market doesn't reward the fearless, it rewards the prepared. Livermore's journey began not in luxury, but in struggle. He wasn't born with wealth or advantage. As a young boy, he worked in bucket shops, small betting rooms where people wagered on stock prices without actually owning shares. He sat in smoky rooms filled with excitement, greed, and desperation. Every tick of the tape told a story, and every loss left a scar. Most men in those rooms were gamblers, not traders. They chased the thrill of winning, not the skill of surviving. But Livermore saw something deeper. He realized that the difference between those who lasted and those who vanished was not intelligence. It was control. He said it himself. Every loss taught me the value of preservation. Those words weren't theory, they were born from experience. Livermore lost fortunes, not once, not twice, but multiple times. And each time, he came back not by changing his strategy, but by changing his mindset. He learned that markets don't care about your predictions, your confidence, or your feelings. They only care about how well you manage what you can't control. That's the true essence of risk. Livermore understood that risk isn't something to fear. It's something to respect. He believed that risk is the invisible force that determines whether a trader survives or disappears. It's not about how much you can make when you're right. It's about how little you lose when you're wrong. That simple shift in perspective separated him from the crowd. While others were obsessed with calling tops and bottoms, Livermore focused on one thing: staying in the game long enough to win it. He often described money as ammunition, not treasure, not reward, but ammunition. To him, every dollar represented a bullet in battle. Once you waste it, it's gone forever. And in trading, when you run out of ammunition, the war is over. That's why he treated his capital like his life depended on it. Because in his world it did. His mindset was brutally clear: money is ammunition. Protect it like your life depends on it. This was not just a metaphor. It was the mental model that shaped his every decision. Livermore knew that the biggest enemy of a trader isn't the market. It's the trader himself. Emotions, ego, and impatience are the real reasons people lose. You can have the perfect setup, the best indicators, and the smartest analysis. But if you risk too much, you will still lose everything. Livermore understood this truth long before the term risk management even existed. In his era, traders didn't have advanced tools, algorithms, or psychology books. But Livermore had something more valuable: self-awareness. He learned through pain that every successful trader must know one number above all others: their breaking point. The amount of loss they can endure before emotions take control. He wasn't afraid of being wrong, he was afraid of staying wrong. That's why he never let a loss grow beyond his control. He accepted small defeats because he knew that surviving small losses was the only way to win big in the long run. Livermore's philosophy became the foundation for what we now call modern risk management: position sizing, loss limits, and capital allocation. But back then, for him, it wasn't a structured system. It was instinct. He sized his trades not by how confident he felt, but by how much risk his capital could handle. He said, in essence, don't bet your life on a single trade, no matter how sure you are. His rules were simple but sacred: never risk your survival capital, always keep enough reserves to fight another day, and never confuse bravery with recklessness. He learned these lessons the hard way. There were moments when he was on top of the world, making millions during market crashes when others were losing everything. But there were also times when he lost it all and had to start over. Those cycles of success and ruin weren't just market events, they were psychological tests. Each loss stripped away arrogance, teaching him humility and discipline. Each comeback rebuilt his confidence, but this time with wisdom instead of pride. Through it all, Livermore realized something profound: that trading isn't about predicting what will happen next, it's about preparing for what could happen. The market rewards those who respect uncertainty. And that's what risk really is: Uncertainty dressed as opportunity. You can't control what the market does, but you can always control how you respond. And your response determines your survival. He believed that the greatest danger in trading comes not from volatility, but from the illusion of safety. When things are calm, people over-leverage, take unnecessary risks, and forget that storms always come. Livermore never forgot. He knew that the market has a way of humbling even the most confident traders. That's why his focus was never on how much he could make, but on how much he could lose without losing himself. He used to say that a trader's real wealth isn't in his profits. It's in his preservation of capital and his control of mind. You can recover money. You can rebuild systems. But once your discipline breaks, everything else collapses. His risk mindset wasn't just financial. It was psychological. He trained himself to detach from the emotional highs and lows of trading. When others panicked, he stayed patient. When others got greedy, he stepped back. Because he knew that emotion is the silent killer of consistency. Livermore's story is more than financial history. It's a masterclass in emotional control. Think about it. This was a man who faced ruin multiple times, yet every time he lost everything, he didn't quit. Why? Because he understood that failure is not the opposite of success. It's the foundation of it. Each failure taught him what not to do, and each comeback reminded him that survival is the ultimate edge. Today, traders have risk calculators, position sizing tools, and stop-loss systems. But many still ignore the most important risk management tool of all, the mind. Livermore's entire philosophy was built on mental resilience. He once noted that speculation is not a game for the stupid, the mentally lazy, or the emotionally unstable. He knew that risk wasn't just about numbers on a chart, it was about psychology, the battle between fear and discipline. If he were alive today, he'd tell every trader this: your job is not to win every trade. Your job is to stay alive long enough to learn from every trade. That's what builds mastery. That's what creates consistency. The market will always give opportunities, but only to those who are still standing to take them. Livermore's foundation of risk was built on 4 timeless truths. First, never risk more than you can emotionally afford to lose, because once emotion enters the equation, reason disappears. Second, always treat your capital like a soldier in battle. Protect it, deploy it wisely, and never waste it on impulsive fights. Third, accept that losses are tuition, the price you pay to learn how to survive. And fourth, understand that preservation is not weakness, it's strategy. The best traders aren't those who make the biggest profits. They're the ones who are still here after everyone else is gone. His life reminds us that risk isn't something to avoid, it's something to master. It's not your enemy, it's your greatest teacher. Every time you take a loss, the market is giving you feedback. Every time you protect your capital, you're proving your maturity. Livermore believed that mastering risk was the ultimate form of self-respect. Because when you protect your capital, you protect your potential. Think about it: how many traders blow up their accounts not because they lacked skill, but because they ignored risk. They let hope replace logic, fear replace discipline, and ego replace patience. Livermore saw it every day in those bucket shops, and he refused to be one of them. He decided early on that survival was the real goal. Profit was just a byproduct. And that's the message that still echoes more than a century later. Risk is not a math problem, it's a mindset. It's the quiet voice that says, stop now, live to fight again tomorrow. It's the discipline to cut a loss when your pride wants to hold on. It's the courage to walk away from a setup that doesn't align with your rules. It's the patience to wait for your moment instead of chasing someone else's. Livermore didn't win because he had secret information or magical indicators. He won because he understood that the game wasn't about prediction, it was about protection. Every move he made was grounded in one question: how much can I lose if I'm wrong? And that question, more than any strategy or chart, is what made him legendary. The foundation of his mindset wasn't built in moments of triumph, it was forged in moments of loss. Every time he fell, he rebuilt with stronger walls around his capital and deeper understanding around his emotions. He knew that trading was not a sprint but a marathon of survival. The ones who last are not the ones who predict the most, but the ones who protect the best. So if you take one lesson from Jesse Livermore, let it be this: the market is not your enemy. Your undisciplined self is. Risk is not a punishment, it's a mirror, reflecting your patience, your control, and your respect for the game. Money is ammunition. Protect it, preserve it, guard it with every ounce of discipline you have. Because as Livermore proved, the trader who survives long enough always gets another chance to win. And that, right there, is the foundation of Livermore's risk mindset, A timeless philosophy that turns losses into lessons, fear into awareness, and risk into the art of staying alive. There's a myth that has haunted traders for over a century. The myth that success in the markets comes from prediction. From seeing the future, calling the tops, the bottoms, the breakouts. Everyone wants to be the genius who knew before everyone else. But Jesse Livermore, one of the greatest traders who ever lived, proved something completely different. That prediction is a fool's game and defense is the true key to survival. Livermore made and lost millions in his lifetime. He could read price action like poetry. He understood market psychology like few ever have. Yet even he admitted that he could never truly predict the markets. He said it plainly, "The game taught me the game." That one sentence holds more truth than any trading course or algorithm ever could. Because what the market taught Livermore, through blood, through pain, through triumph, was that your edge doesn't come from forecasting the future. It comes from protecting yourself when the future surprises you. Every great trader eventually learns this truth. You can't control direction, but you can always control exposure. You can't predict volatility, but you can decide how much it can hurt you. And that's where Livermore built his empire, not on being right, but on staying safe when he was wrong. Defense, in trading, is the art of losing well. It's not about never taking a hit. It's about making sure the hit doesn't take you out. Livermore knew that markets are built to confuse you, to tempt you, to make you believe you're smarter than you are. And that's when most traders die. The modern trader spends hours hunting for perfect signals, watching influencers, studying charts, tweaking indicators. They think the next pattern, the next setup, will be the key to success. But Livermore knew, the game doesn't reward the one who predicts right most often. It rewards the one who loses least when wrong. He built his entire career on this paradox: you can't win consistently by predicting direction, but you can win indefinitely by controlling risk. He didn't guess where the market would go. He positioned himself so that if he was wrong, it wouldn't matter. That's defense. And that's why, while other traders drowned in the tides of greed and fear, Livermore could stand still, calm, detached, and dangerous. Defense is not sexy. It doesn't look glamorous on social media. No one brags about cutting a loss or reducing size. But that's exactly why most traders fail. Because defense isn't exciting, it's disciplined. It's methodical, it's boring. But boring is what keeps you alive. Livermore used to say that speculation is a business, not a game of luck. And in business, survival is everything. You don't need to make the biggest profit. You need to stay open for business tomorrow. That's defense. It's the invisible armor that protects your longevity. Without it, every prediction is just a gamble dressed up as confidence. Think about this: even Livermore, a man whose intuition was legendary, was wrong more often than he was right. But because he played defense, he didn't need to be right every time. He only needed to be right big when it mattered and lose small when it didn't. That's the essence of asymmetrical risk, where one small mistake can destroy months of profit if you're not prepared, but one well-managed trade can make your year if you are. Asymmetrical risk is the silent killer of traders who overestimate their skill. They think a small loss won't matter, until it snowballs into disaster. They double down. They remove stop losses. They believe the market has to come back. But the market doesn't have to do anything. It doesn't owe you a reversal, a bounce, or mercy. It only responds to your level of defense. And if your defense is weak, your survival is temporary. Livermore mastered this concept long before modern portfolio theory or risk models existed. His approach was intuitive, built from raw experience. He knew that defense wasn't just a technical act, it was psychological discipline. Cutting a loss early wasn't just math, it was self-control. Sitting out during uncertainty wasn't hesitation, it was mastery. To Livermore, defense was not the opposite of offense, it was offense. Because in the market, your greatest weapon is your ability to not self-destruct. Every decision you don't make recklessly, every trade you don't over-leverage, every loss you don't allow to expand, that's how you win. The market doesn't care about your predictions, it respects your preparation. Let's put this into perspective. Imagine two traders. The first spends his days chasing every new setup, glued to screens, desperate to catch the next move. He makes some money, then loses it, then makes it again, but the stress never ends. The second trader, Livermore's style, spends his days waiting. He trades selectively, risks small, scales patiently, and focuses entirely on protecting capital. At first he seems slow, cautious, but month after month he's still there, steady, consistent, while the other trader burns out chasing signals. That's the power of defense. Livermore's wisdom was timeless because it exposed a truth few want to face. Markets are designed to extract money from the undisciplined. The more you try to predict, the more emotionally attached you become. The more emotionally attached you become, the more you violate your own rules. And the more rules you violate, the faster you self-destruct. Defense breaks that cycle. It replaces attachment with awareness, prediction with patience, and hope with control. He used to remind himself daily that the market can't be beaten. It can only be survived. That's why he never risked his entire fortune on one idea, no matter how perfect it looked. He knew the power of asymmetry. One wrong bet can erase a lifetime of right ones. A trader's downfall doesn't come from hundreds of small losses. It comes from that one uncut loss that spirals out of control. Livermore's entire strategy revolved around making sure that loss never happened. He once wrote in his notes, "It wasn't my thinking that made the big money. It was my sitting." That patience wasn't about waiting for the perfect trade, it was about waiting for the right conditions. He didn't predict. He reacted intelligently. He waited for the market to confirm his idea before committing capital, and even then, he always had an exit plan. That's what made him powerful. Modern traders often forget this. They chase trades because of social media hype news or the fear of missing out. They believe defense slows them down. But defense doesn't slow you. It preserves you. It keeps your capital intact, and your emotions stable, and your decision-making sharp. You can't trade clearly when you're emotionally wounded or financially desperate. Defense gives you clarity, and clarity gives you control. Livermore's strength wasn't that he could predict crashes. It's that when crashes came, he was prepared. When panic hit, he didn't freeze. He didn't hope. He acted with precision, because he'd already rehearsed the worst-case scenario in his mind. That's what great defense looks like. Calm under chaos. He believed that every trader should build a system of defense before even thinking about profits. Define your loss limit before your entry. Decide your exposure before your excitement. Know your exit before you press buy. He lived by the principle that the time to think about risk is before you take it, not after it's taken you. His mental toughness came from this exact understanding. He knew that the market rewards emotional maturity more than analytical genius. That's why he survived in an era with no computers, no calculators, just paper, pencils, and pure discipline. He built a mental fortress around his capital. And that's something every modern trader needs to learn. Defense isn't weakness. It's power under control. It's the difference between a gambler and a professional. A gambler risks everything on a single outcome. A professional protects everything so they can trade another day. Defense is what gives you freedom. Freedom from fear, from pressure, from desperation. When you know you're protected, you can trade with clarity. When you have no defense, every trade feels like life or death. And that pressure breaks even the strongest minds. Livermore often spoke about learning from the market itself. "The game taught me the game," he said. That means he didn't rely on theories. He let experience shape his wisdom. Every mistake became data. Every loss became feedback. Every drawdown was a lesson in humility. And through that process, he built the most valuable skill in trading: adaptability. Adaptability is the child of defense. When you protect your capital, you buy time to adapt, evolve, and learn. When you don't, the market teaches you one final lesson: extinction. Livermore survived because his mindset was defensive by default. He knew that no edge lasts forever, no setup guarantees safety, no strategy works in every condition. The only constant was risk, and the only defense was discipline. That's the irony of the trading world today. People chase signals but ignore structure. They chase excitement but reject patience. They want to win big, but they don't want to protect small. Yet, every legendary trader, from Livermore to Soros to Dalio, will tell you the same thing. Defense is the only real edge. Livermore didn't predict his way into wealth. He defended his way there. When the market went against him, he didn't react emotionally. He reduced exposure. When uncertainty rose, he stepped back. He wasn't afraid to sit in cash, because cash was not laziness. It was protection. He understood that not losing is a form of winning. So when traders today panic over missed trades, remember this: Livermore sat out more opportunities than he took. But when he did strike, he struck with precision, confidence, and preparation. That's why his wins were massive. Because his losses were always controlled. Defense beats prediction because prediction depends on being right, while defense only depends on staying ready. You can't always predict the next move, but you can always protect yourself from the next mistake. That's why Livermore's mindset still matters. He didn't build a system to outsmart the market. He built one to outlast it. His philosophy was not about control over price. It was about control over self. Defense gave him patience. Patience gave him clarity. And clarity gave him power. And that's what most traders miss. They chase the thrill of being right, but forget the peace of staying safe. They dream of perfect entries, but ignore perfect discipline. Livermore's defense-first mindset wasn't about fear, it was about freedom. The freedom to survive, to adapt, and to grow. So if you truly want to trade like a professional, forget the obsession with prediction. Focus on protection. Forget the chase for profits. Focus on preservation. Because the market doesn't remember how often you were right. It remembers how long you lasted. Jesse Livermore didn't become a legend because he could see the future. He became one because he respected uncertainty and built a fortress of discipline around it. He learned that true mastery isn't about avoiding loss. It's about ensuring that no loss ever defines you. Defense isn't the end of ambition. It's the foundation of it. Because when your defense is strong, your potential becomes limitless. You stop trading with fear and start trading with freedom. And in that freedom, that calm, focused, disciplined state, you finally begin to understand what Livermore meant when he said, "The game taught me the game." Because that's what the market really is. Not a place to predict the future, but a place to master yourself. And in the end, those who master defense master the game. There's a single rule that every great trader lives by, and every losing trader ignores. A trader's first job, Jesse Livermore said, is to survive. Not to win, not to be right, not to predict. To survive. Because survival is the only path that leads to mastery. The rest, it's noise. Most traders never learn that until it's too late. They chase wins, chase predictions, chase validation, and end up chasing their own losses. Livermore understood something most never will. The game isn't about how much you make, it's about how much you keep when the market turns against you. He saw countless traders rise and fall, but the difference wasn't in their intelligence or strategy, it was in how they treated their capital. For Livermore, capital wasn't money, it was life support. Every dollar was oxygen, and when the market took it away, there was no room for ego, only discipline. He would say, "When you're out of ammunition, the battle's over." That's why preservation became his religion. It wasn't fear, it was respect. Respect for risk, respect for survival. To Livermore, capital preservation wasn't just a saying, it was mathematics. It was understanding that the deeper you fall, the harder it is to climb back. Lose 10%, you need 11% to recover. Lose 50%, you need 100% to get back to even. And that's the math most traders ignore. They think losses are temporary, but Livermore knew. Every big loss steals time, confidence, and opportunity. That's why his golden rule was simple: never risk more than you can replace. In today's language, that means risking just 1–2% of your capital on any single trade. Small risk, small damage, maximum longevity. Because here's the truth. Compounding doesn't just work for you when you win. It works against you when you lose. The bigger the hit, the slower your recovery. That's why Livermore would exit the moment a trade went wrong. No hesitation, no negotiation. He believed in stop losses not as a tool, but as a lifeline. It wasn't weakness. It was survival instinct. He once said, "I never argue with the tape. The market doesn't care what I think." That single sentence became his shield. He refused to defend ego over equity. Picture two traders. Both start with 10,000. First one risks 10% per trade, believing confidence will win. The second risks just 1%. In the first month, both lose 3 trades in a row. The emotional trader is already down nearly 30%, frustrated, reckless, and ready to double down. The disciplined trader, down just 3%, calm, focused, ready for the next opportunity. One trades for revenge, the other trades for survival. Fast forward 6 months, and the story writes itself. The emotional trader is gone, account blown, blaming luck and algorithms. The disciplined trader is still standing, small profits, small losses, but a growing account. He didn't win because he was right more often. He won because he stayed in the game long enough to let probability work. That's the power of the 1% rule. It's not glamorous, it's not thrilling, but it's what separates professionals from gamblers. Every professional trader knows you will lose. You will be wrong, but how wrong you allow yourself to be decides how far you go. That's why Livermore never averaged down. He called it the most dangerous habit in speculation. Because when you add to a losing position, you're not managing risk, you're multiplying it. You're trying to prove the market wrong instead of protecting yourself. And every time you do, you trade survival for pride. Livermore treated every trade like a soldier going into battle. You protect your resources, not waste them. You send in limited troops, not your entire army. You position size according to your defense plan, not your dreams. The market doesn't reward bravery, it rewards preparation. The 1% risk rule isn't just about math, it's about mindset. It forces humility. It tells you, you don't know what's going to happen, but you're prepared for it. That's what Livermore mastered. He accepted uncertainty, but never surrendered control. Most traders think control means predicting direction. It doesn't. Control means knowing how much you're willing to lose before you enter. That's where real power begins, in defining your exit before your entry. Livermore built his entire empire on that single principle. He was ruthless with his losses and patient with his winners. If a trade went wrong, he cut it without hesitation. If a trade worked, he let it grow. That asymmetry, small losses, large gains, is the foundation of compounding success. The irony is that capital preservation feels boring. It doesn't give dopamine, it doesn't feed ego. That's why it's rare. Traders want excitement, but excitement is expensive. Livermore used to say, the desire for constant action is responsible for most losses in Wall Street. He understood that boredom was part of mastery. The less emotional he became, the longer he lasted. His wealth didn't come from explosive wins, it came from disciplined restraint. In modern trading, you can see the same principle play out every day. One trader chases alerts, signal groups, and hype videos, hoping for that one big trade that changes everything. Another trader journals, sizes correctly, and focuses on defense. The first burns out in months. The second grows slowly but steadily. And the secret is this: compounding is invisible at first. You don't see progress daily, but it builds quietly, just like losses compound silently in the other direction. That's why Livermore believed that trading wasn't about intelligence, it was about endurance. The market tests patience, not predictions. Every trader gets lucky once, but only those who survive the drawdowns build real wealth. That's why his mantra, a trader's first job is to survive, remains eternal, because if you lose your capital, you lose your freedom to play. And once you're out of the game, no knowledge, no skill, no courage can save you. So what does capital preservation look like in practice? It's setting a maximum risk per trade, 1%, maybe 2%. It's placing a stop loss not based on emotion but structure. It's accepting that your goal isn't to win every trade. It's to manage every trade. It's tracking your risk exposure like a pilot checks fuel. You don't take off without knowing your limits. Livermore ran his trading like a military operation, strict, mechanical, emotionless. His mind was the general, his rules the armor. Every loss, he said, was tuition, but only if you paid and moved on. The moment you tried to win it back emotionally, you turned a lesson into a disaster. That's why capital preservation is more than numbers. It's emotional discipline disguised as math. It's saying no when your instincts scream yes. It's sitting out when your ego says trade. It's having the strength to stop. Because the most dangerous moment in trading isn't when you're losing. It's when you're desperate to make it back. The market rewards emotional control. And Livermore mastered that. When things went wrong, he didn't spiral. He stopped, analyzed, and adapted. When things went right, he didn't celebrate. He tightened his guard. The market has a cruel sense of timing. It breaks you when you feel most confident. That's why he always stayed defensive, even at the peak of success. His philosophy was simple. Never let profit make you forget risk. Think about this: every professional in every field respects defense. Soldiers train for survival before combat. Athletes protect their bodies before chasing records. Pilots prepare for emergency landings before takeoff. But in trading, most skip defense entirely, until the market teaches them why it mattered. Livermore never needed that reminder twice. His rules weren't built from theory, they were built from scars. The story of Livermore isn't about predicting markets. It's about surviving them. It's about knowing that capital is the bridge between experience and opportunity. Once that bridge collapses, there's no crossing back. Every trader who's ever lasted understood that truth in their own way. The goal isn't to make money fast. It's to make it forever. And that begins with not losing it today. Because at the end of every trading day, your account balance doesn't just show numbers. It reflects your discipline. Every dollar you still have is proof that you respected risk. Every unnecessary loss is proof that you didn't. Livermore's success wasn't a mystery. It was mathematics powered by mindset. His capital preservation rule wasn't a suggestion. It was the foundation of survival. And that foundation still stands unshaken by time. So when you sit down to trade, remember you're not here to fight the market. You're here to endure it. Protect your capital like your future depends on it, because it does. Don't trade for excitement, trade for endurance. Don't try to predict, try to protect. Because as Livermore taught, the traders who survive the longest win the most. There's a myth every trader carries when they first enter the market. The belief that success belongs to the smartest person in the room. The one who reads the most charts, decodes the most data, or masters the most indicators. But the market doesn't reward intelligence, it rewards discipline. It doesn't care how smart you are. It only cares how well you can control yourself when the heat rises. That's the brutal truth Jesse Livermore learned after both triumph and ruin. He didn't fail because he lacked talent. He failed because he forgot that emotion, not analysis, decides who survives. Livermore had one of the sharpest minds of his time. He could read tape with the precision of a surgeon. He could sense market shifts before they appeared on charts. But even he wasn't immune to overconfidence. There were times when he made fortunes, millions that most traders could only dream of, and then lost it all because he broke his own rules. That was the paradox of Livermore's genius. He could predict almost everything except his own impulses, and that's what made him human and unforgettable. He once said, "You can't fight the market, you can only control yourself." That single sentence became the cornerstone of his philosophy, and the hardest lesson he ever had to relearn. Every time he strayed from it, the market punished him without mercy. Every time he returned to it, he rebuilt stronger. It wasn't the strategy that saved him, it was self-discipline. The ability to do the right thing when every emotion screamed otherwise. There's a story few know about Livermore. The time he made one of the greatest trades in history, shorting the market during the 1929 crash. He became one of the richest men in America overnight. But success has a cruel side effect: it blinds you to your own fragility. Livermore began to believe he couldn't be wrong. He loosened his structure, ignored his rules, and traded with emotion disguised as confidence. And the same man who conquered the crash lost everything again. Not because of the market, but because he let emotion slip back in. That's when he realized, discipline isn't something you achieve once. It's something you must protect every single day. The moment you think you've mastered it, you've already started losing it. Because discipline isn't knowledge, it's repetition. It's the muscle you build every time you follow your plan instead of your feelings. And that's why most traders fail. Not because they don't know enough, but because they don't do what they already know. Livermore called trading a mental gymnasium. Every trade was a test of character. The market didn't care about his intelligence. It cared whether he could execute without emotion. And he knew the difference between professionals and amateurs was never talent. It was self-control under pressure. The professional doesn't react. He responds. He follows process, not impulse. And that separation between emotion and execution is what keeps him alive when others fall. Think about it. Every trader has felt that surge of adrenaline when a trade moves in their favor, and that pit in the stomach when it reverses. It's biology. But discipline is what separates reaction from regret. It's what allows you to stay calm while others panic, to stay patient while others chase. Livermore learned to see emotion as an indicator, not in the chart, but in himself. When he felt excitement, he slowed down. When he felt fear, he observed. He didn't fight emotion, he managed it, because he knew that in the market, emotional control is analytical skill. Livermore once said, "It was never my thinking that made big money for me. It was my sitting." That's what most traders miss. Discipline isn't about doing more. It's about waiting more. It's about letting the market come to you instead of chasing it. It's having the strength to sit out when conditions aren't clear, to wait for your edge, to trust your system. The market rewards patience the way it punishes greed. And that's why Livermore's greatest weapon wasn't prediction. It was restraint. He understood that markets are designed to test your limits. Every spike, every pullback, every fake breakout is a question: can you stay disciplined? Most can't. They act out of boredom, out of frustration, out of the need to feel in control. But discipline is the art of surrendering control, of trusting your process when your emotions want to interfere. Livermore mastered that art the hard way, by losing when he ignored it and thriving when he obeyed it. And that's where modern traders can learn the most. You don't need Livermore's intelligence to succeed. You need his restraint. You don't need to outsmart the market. You need to out-discipline yourself. And there are tools that can help you build that control. The first is trade journaling, the mirror that never lies. Livermore kept notes on every trade, not just what he did, but how he felt. He wanted to understand not just the market's behavior, but his own. Because awareness is the first step to mastery. A journal shows you patterns that charts can't. Your emotional triggers, your moments of weakness, your recurring mistakes. When you write them down, they lose their power. You start to see that discipline isn't something you find. It's something you track. The second is the pre-trade checklist, the ritual that builds consistency. Livermore didn't place a single trade without verifying that his conditions were met. In modern terms, that means checking: does this trade align with my setup? Is the risk within my limits? Where is my stop loss? Where will I exit if I'm wrong? Am I trading from logic or emotion? 5 simple questions, but they build an unbreakable habit. They force you to slow down. They inject reason before reaction. And every time you follow that checklist, you reinforce discipline. You build trust with yourself. The third is strict entry and exit conditions, the rules that protect you from yourself. Livermore never entered a trade because he felt like it. He entered because the setup proved itself. And he exited not when he wanted to, but when his rules said to. That mechanical mindset is what keeps emotion out of execution. Modern traders can automate part of this. Alerts, stop orders, position sizing formulas. But the essence remains the same: rules first, feelings second. Because when you trade with rules, you turn chaos into structure. And when you trade without them, you turn structure into chaos. Discipline is the line between those two worlds. Livermore's story wasn't about a man who always won. It was about a man who refused to quit, no matter how many times he had to rebuild. He understood that every failure was a test of discipline, not destiny. When he lost fortunes, he didn't blame the market, he blamed the man in the mirror. And then he rebuilt, quietly, methodically, with even stricter rules. That's the mark of a master, not perfection, but persistence. He knew the secret that separates lasting traders from temporary ones: consistency builds trust, not just with your capital, but with yourself. Every time you follow your plan, you strengthen that trust. Every time you break it, you weaken it. And that trust is the foundation of confidence. Because confidence isn't saying, "I know what the market will do." It's saying, "I'll follow my rules no matter what happens." Livermore's discipline wasn't natural. It was forged. He had to lose everything to understand that emotion is the enemy of survival. And when he came back, he built systems that protected him from himself. He defined every move, every exit, every stop. He didn't rely on willpower. He relied on structure. Because willpower fades under pressure, but structure holds. That's why he said, "The game taught me the game." The market was his teacher, and pain was his tuition. For modern traders, the message couldn't be clearer. You don't need to be a genius. You need to be consistent. You don't need to predict the future. You need to manage your present. The difference between success and failure isn't talent. It's the ability to stay disciplined when everything inside you wants to break the rules. And here's the truth few admit. Discipline feels unnatural at first. It's uncomfortable. It feels like restriction. But over time, that restriction becomes freedom. The freedom to trade without fear. The freedom to execute without doubt. Because discipline isn't limitation. It's liberation from chaos. When you control yourself, you control your trading. And when you control your trading, you control your destiny. That's the lesson Livermore left behind. One that outlived every fortune he made or lost. He proved that emotional control is the highest form of intelligence. That the market rewards those who can delay gratification, who can sit through uncertainty without panic, who can follow their plan even when it hurts. Because the truth is, the best traders don't win because they're fearless. They win because they're disciplined despite fear. So, as you trade, remember this: the market will always tempt you. It will whisper to you when to chase, when to double down, when to take revenge. But your job isn't to listen. It's to follow your plan. To act according to your system, not your feelings. To build a mind so structured that chaos becomes background noise. That's what Livermore mastered. And that's what every trader must learn if they ever hope to last. Because in the end, talent may open the door, but only discipline keeps you inside. Jesse Livermore's entire career, one that every trader should carve into their mindset. Cash is a position. To the average trader, cash feels like waiting, like doing nothing, like losing time. But to Livermore, cash was power. It was control. It was the difference between reacting and preparing, between surviving a storm and being swept away by it. He understood something that most traders still refuse to accept: not trading is sometimes the most profitable trade you'll ever make. In a world obsessed with action, Livermore chose stillness. When others filled their screens with constant movement, he sat out. He would often stay out of the market for days, even weeks, not because he was uncertain, but because he was disciplined. He wasn't waiting for the market to move, he was waiting for clarity. Because Livermore believed that money isn't made by always being in the market. It's made by being in the market at the right time. He used to say, "There's a time to go long, a time to go short, and a time to go fishing." That last part, fishing, was his secret weapon. He knew that sitting on cash wasn't weakness. It was patience weaponized. It was emotional control turned into a financial strategy. While others chased every tick, every rumor, every breakout, he waited for the perfect moment, the moment when probability and conviction aligned. That's what most traders never master. They confuse movement with progress. They think trading every day means they're improving. But Livermore knew better. Every unnecessary trade chips away at capital and confidence. Every low-quality setup you take out of boredom creates emotional noise that blinds you to real opportunity. He didn't want action, he wanted advantage. When Livermore stayed in cash, he wasn't retreating, he was reloading, observing, waiting for the market to reveal its hand. Because the market always does, eventually. But only the patient see it. Only those willing to sit in silence can hear the rhythm beneath the chaos. That mindset, that discipline to wait, is what separates professionals from impulsive traders. Livermore's diary often revealed stretches of total inactivity, weeks where he placed no trades at all. To outsiders, it looked like inaction. To him, it was positioning, because cash wasn't idle, it was preparation. It gave him flexibility, emotional clarity, and the ability to strike hard when the moment arrived. He understood something most traders ignore: you don't get paid for activity, you get paid for accuracy. Every time you enter a trade without edge, you dilute your performance. Livermore built his empire not by trading often, but by trading precisely. He waited for what he called the big swing, the rare moment when everything aligned, and when it did, he went all in, with conviction, not emotion. That's where modern traders can draw their biggest lesson. Patience isn't passive, it's strategic restraint. And in today's world of instant data, flashing charts, and constant alerts, this lesson is more relevant than ever. Because now, traders are bombarded with information, and the illusion that more information means more opportunity. But Livermore would have laughed. He knew that selectivity, not activity, builds wealth. So how does this philosophy translate to today's markets? With our algorithms, automation, and real-time data. The tools have changed, but the principle remains timeless. The goal is to protect clarity while waiting for opportunity. Let's start with predefined entry triggers. Livermore's philosophy modernized. He didn't call it that, but that's what he practiced. Before every trade, he waited for his trigger condition. It could be a breakout through resistance, a pattern repeating from memory, or a clear shift in momentum. He never guessed. He waited for confirmation. Today, that's as simple as defining your setup. When X happens, I'll enter. Until then, I wait. This eliminates emotional guessing. It turns chaos into a checklist. You stop trading what you feel and start trading what you see. Next comes automation for stops. Livermore's invisible guardrails. Back then, he placed mental stops and honored them with iron discipline. Today, traders have an advantage he never had: automation. You can predefine your risk and let the system execute for you. But the mindset remains the same: protection first, profit second. Automation doesn't replace discipline, it enforces it. It's the digital form of Livermore's principle: never argue with the market. Then there's risk to reward tracking, Livermore's silent compass. He never entered a trade without knowing his potential upside versus downside. If the ratio wasn't worth it, he stayed out. He knew that even good setups weren't worth taking if the reward didn't justify the risk. Modern traders can quantify this precisely. If the setup offers less than 2-in-1 or 3-in-1 reward to risk, skip it. Livermore would have called that common sense. Because every trade you avoid is as important as every trade you take. Avoiding low-quality trades doesn't just save money, it compounds time and focus. Every avoided mistake is preserved capital. Every preserved capital is optionality, the freedom to act when the real opportunity comes. Livermore mastered this art. He said, "It was never my thinking that made the big money for me. It was my sitting tight." And that's not a metaphor. It's a formula. Because here's the truth: most traders blow up not because of one bad trade, but because of 100 small ones. Tiny, unnecessary, emotion-driven actions that slowly drain their account. Livermore's secret was to do the opposite. Fewer trades, bigger impact. Quality over quantity. Patience over impulse. Let's imagine two traders again. The same scenario Livermore used to explain to his students. Both start with 50,000. The first takes 100 trades a month, chasing every move, every setup, every social media signal. The second takes 5, but he waits, he journals, he analyzes, he strikes only when the odds align. After 6 months, the first trader has thousands of trades, endless stress, and a shrinking balance. The second, fewer trades, less stress, and consistent growth. He wins not by trading more, but by trading better. That's the essence of Livermore's practicality. The market rewards selectivity. Because not all setups are equal. Most are traps designed to test your discipline. Livermore said it best: the desire for constant action is one of the greatest enemies of success. The market doesn't demand your participation. It demands your patience. And that's the hardest part of trading. Doing nothing when everything inside you wants to act. That's why Livermore treated waiting as work. He'd spend hours watching price action, taking notes, building context. He was always active, but not always trading. His activity was mental preparation, not impulsive execution. That's where traders today can find real edge, in redefining what it means to work. It's not about clicking more buttons or staring longer at charts. It's about thinking clearly, planning carefully, and acting only when probability is undeniable. That's where confidence comes from, clarity earned through waiting. Livermore's patience wasn't passive optimism. It was active readiness. He stayed alert, not idle. He didn't fear missing out. He feared losing discipline. And that's what made him different. Most traders trade because they can. Livermore traded because he must. There was a reason, a structure, a justification, not emotion. If you watch his life closely, you'll see that every comeback he ever made started in silence. Every breakthrough began with patience. Before every major win, there was a long period of inactivity. Observation, reflection, refinement. That was his rhythm, expansion and contraction, action and rest. Just like the market itself. That's the part few traders understand. The market moves in cycles, and so should you. You can't trade aggressively all the time. You must protect energy and focus during low probability periods. Cash lets you do that. It's the buffer that keeps emotion out and clarity in. In Livermore's words, the big money is made in the waiting. And that's not just poetic, it's mathematical. The fewer mistakes you make, the faster your capital compounds. Avoiding a bad trade is the same as making a good one, sometimes better. Because losses don't just cost money, they cost confidence. And confidence takes longer to rebuild than capital. Livermore's practical genius was that he built rules that protected both. His cash wasn't sitting idle, it was earning interest in patience. His selectivity wasn't laziness, it was strategy. His silence wasn't hesitation, it was observation. For modern traders, this philosophy is more accessible than ever. You can automate entries, backtest systems, and filter noise with data. But all that technology means nothing without Livermore's mindset, the willingness to wait for alignment. Because technology amplifies habits, good or bad. If you're impatient, automation will just make you lose faster. But if you're disciplined, it will multiply your precision. And that's where Livermore's final insight shines brightest. Success isn't about doing more. It's about doing less better. It's about mastering the rare skill of restraint. Every trade you skip that doesn't fit your criteria is a silent victory. Every moment you stay in cash while others overtrade is a quiet act of professionalism. He believed that trading wasn't about predicting markets. It was about surviving them. And survival often meant stepping aside, letting the market play out, waiting for emotion to burn itself out while you remain untouched. That's how he built longevity, through patience, clarity, and control. Livermore's wisdom echoes louder today than ever. Cash is a position. It's not a retreat. It's a strategy. It's the decision to stay neutral until your edge appears. It's your shield against chaos and your weapon when opportunity strikes. He proved that waiting doesn't slow success. It compounds it, because every moment spent not trading recklessly is a moment invested in preparation. And preparation in trading is everything. So, when the charts move fast and social media screams opportunity, remember Livermore. Remember that patience built his empire, and impulsiveness destroyed it. Remember that every trade you don't take out of discipline brings you closer to mastery. Because in the end, the goal isn't to trade more. It's to last longer. The traders who survive the longest win the most. And survival begins with restraint. Livermore's legacy isn't in his wealth, but in his wisdom. In the timeless truth that still defines trading today, you don't need to always be in the market to be winning. Sometimes, the smartest move is waiting. And that's not doing nothing. That's doing everything right. The market is not a machine of logic, it is a mirror of human emotion. Every rise, every fall, every violent swing of price reflects the same cycle: greed, fear, hope, and despair. Repeated through generations of traders who believe they are smarter than the last. Livermore understood this truth not from books, but from the battlefield of his own experience. He watched the emotional pulse of the market like a doctor watching a heartbeat. He didn't trade prices. He traded psychology. To him, each tick was human behavior made visible. Optimism turned into euphoria, caution turned into panic, and silence turned into screams. He knew something that few truly understand: markets don't move because of numbers, they move because of emotion. And emotion, when left unchecked, destroys even the sharpest minds. In every great bull market, it starts the same way: disbelief. Prices rise, slowly and quietly, while the crowd laughs at those who dare to buy. Then, curiosity turns to acceptance, and acceptance turns to obsession. The same people who mocked the rally now tell themselves it will never end. Livermore used to say, "The moment the public joins the move, the end is near." He understood that the crowd only moves when emotion takes over logic. That's the first half of the emotional cycle, disbelief turning into euphoria. The second half is darker. Euphoria becomes anxiety. Anxiety turns to fear. Fear becomes panic, and panic eventually gives way to despair. Then after enough pain comes disbelief again, and the cycle begins anew. Livermore's genius was not in predicting where prices would go. His genius was in recognizing where emotions were. When the market was loud with greed, he stayed silent. When it was quiet with fear, he became bold. He once said, "The market is never wrong. Opinions often are." What he meant was simple: the market itself doesn't care about what you believe. It reacts to what the crowd feels. He would sit for hours, watching the tape, not for signals, but for emotion. A fast rise on light volume told him greed was impatient. A slow decline told him fear was creeping in. He knew that price action was a language, and emotion was its alphabet. The trader who learned to read it could see what others couldn't. But Livermore wasn't immune. The same emotions he studied eventually swallowed him too. When he made his fortune shorting the market during the 1929 crash, he became one of the richest men alive. Reporters called him the Great Bear of Wall Street. His name became a legend. Yet, not long after, he lost it all, not because the market changed but because he did. Overconfidence replaced patience. Ego replaced discipline. He broke his own rules, traded too soon, too large, too often. The same emotions he once profited from became his downfall. And that is the cruel symmetry of the emotional cycle. It doesn't care if you are a beginner or a master. It only rewards those who stay humble enough to follow their rules. Livermore's story is not one of genius lost. It's one of timeless truth. Even the greatest traders fall when they forget that survival depends on emotional balance. His life teaches one brutal lesson: the market can destroy anyone who lets emotion replace structure. Modern traders still walk the same psychological path. We chase every green candle as if it's a guarantee. We fear every red one as if it's the end. We believe we're rational, yet our decisions are driven by dopamine and fear. The screens are faster, the charts sharper, but the brain behind the click is the same as it was 100 years ago. Technology has evolved, but emotion hasn't. The modern trader still rides the same roller coaster: excitement when in profit, panic when in drawdown, regret when stopped out, greed when recovered. We call it volatility. Livermore called it human nature. He believed that the only way to survive was to become emotionally neutral, to feel nothing, to act only on plan, never on impulse. A trader's job, he said, is not to predict the future, but to react correctly to the present. That is emotional discipline, the art of staying calm when others lose control. Livermore often reminded himself that cash is also a position. Sitting out of the market was not weakness, it was wisdom. When emotion clouds vision, staying in cash means staying alive. The amateurs see inactivity as missed opportunity. The professionals see it as strategic defense. If he were alive today, Livermore would look at modern traders and see the same cycle repeating. People glued to screens, chasing setups, overtrading, seeking comfort in indicators instead of process. He would say, the game never changes, only the faces do. Because every chart, every trend, every crash is simply the emotional cycle drawn in price. To break the cycle, you must first see it in yourself. You must recognize when you are trading to feel something, not to execute something. When you crave action, that's your signal to pause. When you fear loss, that's your signal to review. When you feel invincible, that's your signal to step back. Livermore once said, "The game taught me the game." He didn't mean the market gave him wisdom. He meant the pain did. Every loss carved discipline into his mind. Every mistake wrote another rule. Every emotional decision reminded him that survival depends not on brilliance, but on balance. And that's the greatest paradox of trading psychology. The market doesn't punish you for being wrong. It punishes you for staying wrong. It doesn't destroy your account in one bad trade. It destroys it through the emotional decisions that follow. You don't blow up because of a setup. You blow up because you couldn't stop yourself. In the end, Livermore's legacy isn't about his wins or losses. It's about his understanding of emotion. That the market cycles are reflections of our own. His lessons are not technical formulas. They are human truths. Control your emotion, or the market will control you. Protect your capital, not your ego. Learn from loss, not from luck. When nothing feels right, do nothing. Because in trading, survival is not about predicting where the market will go next. It's about mastering the part of you that reacts when it gets there. So the next time you look at a chart, remember, what you're seeing isn't just data. It's collective emotion made visible. Every candle tells a story of fear and greed, of triumph and regret. And if you can learn to see beyond the numbers, to read the psychology hidden inside the price, Then you'll finally understand what Livermore meant when he said, "The market never changes because human nature never changes." That is the emotional cycle. It begins with disbelief and ends with wisdom. If you survive long enough to learn from it, when you step back and look at the journey of Jesse Livermore's trading philosophy, one truth stands above everything else: survival. The man who lived through fortunes and failures, who experienced the full emotional spectrum of market life, left behind lessons that don't age with time. They evolve with every generation of traders. And now it's your turn to internalize them, not just as ideas, but as rules that shape your very identity as a trader. Rule number 1: protect capital first. Everything in trading, every dream, every goal, every future opportunity, depends on the money you still have. Without capital, there's no comeback, no compounding, no shot at redemption. Livermore used to say, "A trader's first job is to survive." He meant it literally. Every loss, every small mistake, every moment of overconfidence chips away, not only at your balance but at your mental resilience. Protecting capital isn't about fear. It's about respect. Respect for the game, respect for probability, respect for the unknown. In a world where everyone wants to double their account overnight, the real masters are those who know how to defend it over years. Rule number 2: defense beats prediction. This rule separates the amateur from the professional. The crowd is obsessed with calling tops and bottoms, with guessing what the market will do next. But Livermore learned through blood and experience that you don't win by being right. You win by staying alive when you're wrong. He didn't try to outsmart the market. He built systems that absorbed the damage when the market turned. Every professional trader today, from hedge funds to prop firms, stands on this same principle. Defense means you're always ready for impact. It means your position size, your stop loss, your risk per trade. All of it is designed to protect you when your prediction fails. Because it will fail, and that's okay. What matters is how much you lose when it does. Rule number 3: discipline creates consistency. Talent might get you in the game, but only discipline keeps you there. Livermore lost everything more than once, not because he didn't understand the market, but because he broke his own rules. When he rebuilt, he did it through self-control. Discipline isn't glamorous, it's the quiet repetition of good decisions. It's showing up every day with the same checklist, the same risk limits, the same respect for your rules. And here's the truth: every consistent trader is boring. They don't chase signals, they don't panic. They follow structure, not emotion. That's where real consistency lives, not in your setup, but in your self-control. Rule number 4: patience pays more than activity. This one might be the hardest. In an age where your phone buzzes with every tick, where social media rewards the loudest opinions, waiting feels like doing nothing. But Livermore knew that waiting was where the real money is made. Cash is a position, he said. Sometimes, the best trade is no trade at all. Great traders don't trade every move. They wait for the right move. They let the market come to them. Because when you trade out of boredom or fear of missing out, you're not trading the market, you're trading your emotions. The difference between a gambler and a professional is patience. So what does this all mean for you? Right now, today, as a modern trader, it means your job isn't to find the next holy grail strategy. It's to build your own Livermore-style rulebook. A living document that defines how you protect, manage, and multiply your capital. Start with the basics. Action step 1: set your risk percentage per trade. Decide right now, how much are you willing to lose on a single trade without emotional reaction? 1%, 2%, whatever the number is, make it sacred because that's your shield. Every professional knows their exposure before they enter, not after. Action step 2: use hard stop losses. A stop loss isn't a suggestion, it's your seatbelt. It's not there because you don't trust your analysis. It's there because you respect uncertainty. Markets don't owe you logic. One random headline, one algorithmic wave, one flash crash, and without stops your entire account could vanish. Livermore learned this the hard way. You don't have to. Action step 3: journal your emotional triggers. Every trader thinks their problem is technical, but most are psychological. Write down what you feel before, during, and after each trade. Track your impatience, your fear, your greed. That journal will become your mirror. And the moment you start noticing your emotional patterns, you take back control. You stop reacting and start responding. Action step 4: build your personal trading rulebook. Take everything you've learned, from capital preservation to patience, and write it down as if you were teaching it to someone else. Because when your rules are written, they become real. This is what Livermore did in his own way. He didn't just trade with numbers, he traded with philosophy. Your rulebook will outlive your trades. It's the compass you return to when chaos hits. Now step back and think. Every principle Livermore lived by was forged in pain, not theory. Every quote, every lesson, every insight came from losing, reflecting, and rebuilding. He wasn't superhuman. He was a man who made every mistake possible, but refused to stop learning. That's what made him legendary. You don't need to predict the market to win. You need to master yourself. You need to survive long enough to let time do the compounding. So, as you close this chapter, remember, trading is not a sprint, it's a psychological marathon. Your emotions will test you more than your charts. Your discipline will define your destiny. Protect your capital. Play defense. Stay disciplined. Wait patiently. And build a rulebook so strong that no storm can shake it. Because the goal isn't just to make money. It's to stay in the game long enough to become the kind of trader Jesse Livermore would respect. And if you do that, if you choose survival over ego, process over prediction, patience over impulse, you'll find yourself in the rare company of traders who don't just make money, they understand it. That's when trading stops being chaos and starts becoming mastery.